I'm Paul Bevan from Dream Financial, mortgage broker and investment property specialist. Today we're going to talk about two really common myths and two myths that have appeared recently in the media that I'm going to blow out of the water about home loans. Just to give you a little bit of background about myself first. As I mentioned, mortgage broker and investment property specialist at Dream Financial. However, I also spent 4 years building a credit risk department within one of the big four banks. Okay, so that involved building an application scorecard, developing credit and lending policy. So just to give you a little bit of background about myself, if you didn't already know that, which is going to lead in very well to today's topic. So what I'm going to do is, as I said, bust two of those ridiculous myths that you hear about home loans. And as I said, these recently appeared in the media, and they were made by so-called expert commentators. I'm not going to name any names today. That's not what this is about. But just to give you an indication of how widespread this misinformation is, this first one that we're going to talk about was shared by one of the largest mortgage aggregators in the country. It was an article written in a high-profile property investment magazine, and it was written by a high-profile investment property commentator. And what was it? Okay, so the title actually was in reference to valuations, and it was, "Why does your valuation come in lower than expected?" Now, the comment that was made within the article was that lenders assess risk based on factors such as the population of the postcode you're buying in, market conditions, and growth expectations. Okay, basically that's a load of rubbish. Okay, lenders either utilise an online valuation produced by a data company such as CoreLogic RP Data, or most often, as is most often the case, they'll contract a licensed valuer to undertake a valuation. That could be curbside externally from the property, or it could be a full internal valuation, most commonly a full internal valuation, okay? So valuers are engaged to provide the market value of a property at a particular point in time. Okay, so the valuer is going to use what's called the market comparison method, and it's something we've spoken about previously, which basically compares your property with other similar properties that have recently sold. Okay, so if you've got a 3-bedroom house that you're getting valued, they'll compare recent sales of 3-bedroom houses in your area to your property and use that as the baseline for working out their valuation. Okay. Either way, the population of the postcode, market conditions and growth expectations have absolutely nothing whatsoever to do with your valuation or the lender's risk assessment, okay? That is just absolute nonsense. In terms of what will actually lower your valuation, the top 3 things that will lower your valuation is removing a bedroom, so replacing a bedroom and turning it into, a dining room or another rumpus room. Number of bedrooms really is a key variable in the valuation of your property. One of the other things is removing necessary car accommodation as well. Again, that's going to affect the valuation of your property. And another one that's seen quite often is unfinished or half-finished renovations. Okay, that's definitely going to affect the valuation of your property as well. Okay, so let's get that one out of the way and move on to the other one. So one of the other comments that's recently been in the media, and I'm sure plenty of people have seen this article, it was on the blog of a extremely large mortgage broking franchise, and it was actually quoting a credit manager from a large lender as well. So it was talking about reasons why your loan is rejected or can be rejected. So it was the top reasons banks reject home loan applications, okay? The comment within the article was, your loan is likely to be approved only if the lender deems the property to be in a good area. what a load of nonsense. Who determines what a good area is? That would make it seem as though there's a panel of people assessing your loan application and deciding whether or not you're in a good area or a bad area. It's just absolute nonsense. If the valuation stacks up and you can service the loan, the bank's going to approve your application, okay? In terms of some of the top reasons that your loan application may get rejected, I'm going to run through a few now. A common one is undisclosed defaults in your credit history. So if you've got some defaults or something like a major event like a bankruptcy that is in your credit history and you haven't disclosed that prior to submitting your application, that's definitely going to cause you some issues. Secondly, not being able to provide proof of a stable income is another major reason that your home loan application may be rejected. So that's what I mean by that is being able to provide sufficient evidence of your income. So in terms of pay slips, transfers of your wages going into your bank account, or if you're self-employed, your financials or tax returns and things like that. So just unsubstantiated claims for income is going to give you problems in terms of your loan application. Another one that's related to that is not earning enough income to be able to service the debt as per the lender's servicing requirements. Okay, that's going to be another major reason that your application may possibly get rejected. If the bank says based on your income that you've been able to provide, you don't have enough money left over every month to make the repayments on the home loan that you've applied for, the amount that you've applied for, then your application is going to get rejected. The other one that I do want to mention as well is not having enough deposit to fit within the LVR limits of the lender as well. That's another major one. So if you don't have, depending on your situation, your 20% deposit plus costs, so being able to complete the purchase of the property, and then again, your application is going to get rejected. Okay, so just in summary, just wanted to cover off those two absolute myths that have been mentioned in the media recently. And I guess really the point of this podcast, or sorry, this Periscope session and this video is to make you aware that you really do need to be careful who you listen to and where you get your advice from. Okay, so if there's anything that I can help you with, please don't hesitate to get in touch, and I hope to speak to you soon.